Welcome back to Futures with Ben Lichtenstein. The dollar into new 2018 highs this week has attracted some attention, to say the least. Now, it's come off some from the high that we saw just shy of 97. It topped out at 96.86.5. For more on the move that we saw this week, I want to bring in Mr. Alan Nuckman. He's the Chief Market Strategist at Agora Financial. Alan, happy Friday. Thanks for coming on. It's a pleasure to have you with us this morning.
Good morning, you, Ben.
Good morning, Alan. Strong dollar is a concern, especially for companies doing business abroad. But have we reached that point yet? Was any of the weakness that we saw Wednesday in the indices due to the dollar rip that we saw higher?
Well, I think they were both both part of the same idea there. A little bit of instability, but a little bit of volatility. But let's put it in perspective. It was a little tiny VIX explosion, a little bit of a bounce in volatility that got the markets concerned. Got up to 19 in the VIX. Hadn't been there in a while, in about 6 weeks, I think. But we were also down to the 10 handle just last week. So a little bit of profit taking there. And that spilled over. The dollar had a bounce. But if you look at things on a weekly basis, we're essentially unchanged on a weekly basis. So we may have another case where we make new highs in the dollar and a lower weekly close. And vice versa in the euro currency, you saw new relative lows, but we're right at unchanged right now in the euro currency for the week. So we'll have to wait and see. It's not a blow-off top just yet, but it's something to keep an eye on.
Yeah, definitely something to keep a close eye on. What I look for at this point, Alan, is whether we accept price at this level or reject it and work our way in the dollar's case.
Accept or reject.
That's right.
I think I've heard that from you a couple of times.
Definitely, Alan, something I watched. Let's talk a little bit about the British pound and some of the weakness that we saw there, because some of it related to Brexit concerns, some of it tied to weak economic data, but this week, they posted some strong retail sales numbers. Now, Alan, I know one data point a trend does not make, but the longer the economic expansion continues here in the U.S., does it become more likely that it will become contagious and eventually that ripple effect will start to play out?
Well, that was the case not so long ago, where we had global growth. Everybody was growing. The German stock market was making new highs. The FTSE was making new highs. So I'm looking for that to resume. I've been very optimistic about the overall market here in the United States, and that's come true once again. And not being a genius here, just respecting the bull market and the fact that it's a lot easier to go with the flow than try and pick the turn. And I'm not trying to be the smartest guy, but I'm not trying to be the dumb guy that's picked the top of the market. You know, that sell-off that we had in February was another opportunity. We've seen this time and time again. And I think that, the positive tone that we're setting here in America is going to wrap itself around the world once again, once we get some of these issues, more follow through on some of these issues. We've got China's been a pullback, obviously, and let's see what happens in the rest of Europe. But I think there'll be some opportunities for those particular markets to play some catch up to our performance, obviously.
Yeah, one thing I was watching here was the peso, which actually came off recently from some upper levels as well. I'm wondering why you think it sold off. We had rallied, potentially too much too fast, or was this possibly just more tied to some of the emerging market concerns?
Yeah, that's what I was going to say. Emerging markets, they're in that basket. They're in that basket of emerging market stocks, emerging market currencies, and they just got caught up in the unwind. So, let's see if that's an opportunity. I'm a guy that likes to look, 6 months, 9 months, a year out, use some long-term options to position for that. So I'm looking to see if China could have some sort of recovery. I'm looking to see, some of these other EEM emerging markets can have some sort of bounce. From a risk-reward standpoint, I like those currencies. I like those stock indexes that have just been hammered. Yeah. And, if history is any precursor, then, we've seen these things where they get overdone on the downside. Everybody gets overly pessimistic, and they usually bounce back.
Yeah, especially in a thin trade, a summer type trade that we're seeing here, middle of August now. Alan, the move in the dollar exhausted a lot of energy this week. It's Friday, as I just mentioned, middle of August. Kind of limited activity headed into the open this morning, at least in the currencies. We've got some numbers today, though, at 9 a.m. Central Time. Leading indicators, e-commerce, retail sales, consumer sentiment. Anything we should be dialed in on here today as far as potential impact to the dollar?
Well, we haven't even talked about what happened yesterday. Yesterday was huge. Yesterday erased all of that nonsense. that we had in the past week about Turkey. And essentially on Wednesday, what we did was we took out those swing lows from Monday and we came back to that level. So that was a pretty powerful sign. And then yesterday we got all the buyers to step up once again. If you look at the stock market and the macro markets had a healthy rebound yesterday. So again, you made the right point here, and I don't think people are aware of it. If you looked at the S&P action in the last week or so, we're trading about 1 million, 1.5 million contracts, whereas, when you typically get these kind of downdrafts and this profit-taking pullback, you're usually seeing it on 2.5, maybe 3 million contracts. So this is about half the volume of normal. So this makes us less significant. And to use your vernacular here, we tested those lows, we rejected those lows in the S&P. So I'm looking for the broad macro market to remain stable, and I think a lot of these other markets will fall into place. It'll just take a little bit of time. So let's see where we are today. But if you're looking at the S&P is positive right now on the week. Now, in the middle of the night last night when I got up and looked at prices, we were positive. We've given back some of those gains. But let's see how we finish today. But after all of this, in testing the 2,800 level in the S&P, it looks like we could have a plus week.
Yeah, I mean, Alan, I'm looking at price right now, 28.38 last in the ES, only 40 handles off an all-time high in the ES for the most part. But the one thing that concerns me, and I'm wondering what your thoughts are as far as this goes, in terms of the dollar, especially the dollar strength, and it weighing on some of those larger large cap stocks that have more exposure to some of the internationals. Does it concern you to see the Dow, which is still kind of struggling to get anything with any real conviction into that 26,000 level?
Yeah, I'm looking at the Dow as an opportunity. It's really lagged so far this year. It's only up a couple of percent compared to the S&P, or even compared to tech, which has been a runaway train, obviously. And I saw some of the internal numbers from earnings, and the companies that get most of their revenues from overseas, actually their earnings growth was pretty solid, was in the 20 level, whereas the others were in the 30 level. So it's averaged out to be about 25 because companies get about half of their profits from overseas. So it hasn't caused as much damage. Yeah. Again, to put in perspective, we're at 95, 96. This is the halfway level of the drop from the 2017 top to those 2018 lows. So we're right at that halfway level. If we were at 100, maybe we could start having that conversation. The one thing that I do think right now is weighing on the market that could quickly change is oil. If oil can get its legs once again, those energy stocks can start to play ball, and they can support some of the other sectors of the market. And they've really been held back here recently. It's now we haven't printed 70 in oil for the whole month of August, which is interesting in itself. We did make some new relative lows this week, but we're hanging on at that 66 level, and we're down about $1.50 on the week. But that is mainly because of this hammer in the dollar that's driven gold straight down and trying to take down some commodities. But like I said, net on a weekly basis, the dollar index is essentially unchanged this week after making new relative highs.
Yeah, it's interesting you brought that up because I've actually been watching the ES versus the crude oil as well. And aside from the move lower in the crude this week, which we, for the most part, saw ES slightly higher, as you mentioned, it's been tracking very closely, those two, especially last week as the crude sold off. The ES was coming off a bit as well. Alan, giving us a lot to watch there as we close the week out and as we get started or look forward to next week. Really appreciate you coming on the show here today. Have a great weekend, Alan. Traders, that's Alan Nuckman joining us from Agora Finance.